What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, February 26th. Well, guys, Nvidia stock here on Friday finished the day up $2.79 a share, 0.36%. Let's take a look at this name. We'll start here on the 1-minute chart. You can see here, if we zoom in a little bit, that the stock actually is just about flat, maybe down a couple of points here after hours. I mean, it's really not all that substantial at all, about 0.25% down after hours. As always, with after hours movement, absolutely take it with a grain of salt. Why? Here, there's your culprit. See how low that volume is? It's very easy to move around stocks after hours. I mean, listen, if it's in your favor, great. If it's in your favor, really, or against you, though, you have to take it with a grain of salt. It's just the way it is. Volume is so low. So let's start here on the 1 minute, just taking a look at some intraday revenue generating opportunity before we head into the bigger picture here. By the way, if you guys appreciate me covering Nvidia, I'm doing it every single day. I mean, for the foreseeable future here, I don't really anticipate stopping. If you do appreciate that and you want me to keep covering Nvidia every day, let me know in the comments section. That feedback is tremendously helpful. And also, you know, if you haven't done so already, I'm trying to hit 2,000 subs in the next, I think, 7 days or so. So if you want to keep getting notified for these videos every single day, please subscribe to the channel. Helps out a lot. So let's take a look here at the intraday revenue generating opportunity. Really the majority of any opportunity at all that maybe you may be able to replicate come Monday. And by the way, this is intraday trading, scalping around a core position. Okay. That we may be able to replicate come Monday. So today, though, honestly, guys, looking at a lot of this opportunity, I know that some traders are going to try to trade that volume-weighted average price breakdown. For me, I have a couple of setups maximum in my playbook, which is a bit longer, that do not require the actual stock itself to be quote-unquote in play. Okay? A stock that's moving, that has a fresh news catalyst, elevated relative volume, a lot of eyeballs are on it on that particular day for whatever reason. One of those setups is a setup that, again, I'm not really claiming to be the only one to trade this way, but, you know, I'm the only one that I've seen. I developed it for my own use. I called it the repeat offender setup. It's a setup I still use to this day, every single day. And it's similar. It's really what I'm looking for is a setup similar to this, where we see clean bounces with a wide channel to the 20 EMA and this -2 standard deviation band off of volume weighted average price, right? I'm only interested in things that are self-fulfilling prophecies, subconscious, very psychological, things that a lot of other people are trading off of. And I found over years of testing and actually trading this strategy off of both the short side and the long side, that it has edge in all market conditions. I've traded it through raging bull markets and just horrendous bear markets. And it's one of my only setups that I have that doesn't require the actual stock to be in play to have substantial edge. Okay, this one here, though, today on Nvidia, we just didn't get anything on Nvidia today. That's fine, but listen, a little, I think this is kind of a golden nugget for some of you. The truth is, trading just any old blue chip on any old trading day where it's not particularly in play, like Nvidia today, I wouldn't say was particularly in play, which is not a hit on Nvidia, it's just the intraday movement, right? There's very little edge to be had. It's a really good way to get chopped up. So make it easy on yourself. Trade setups that have edge across everything, but those are rare. The majority of your playbook is likely to require the stock itself to be in play, have a lot of other retail traders trading it, a lot of humans trading it, and not all that many algorithms. And that really, really beefs up the edge. It'll make your life a lot easier, assuming you already are very good at managing your risk. So that's enough of that. Let's move on here from the intraday mentality and start looking at Nvidia contextually from a day-to-day perspective as we head into Monday to get prepped here. So 5-minute chart. You guys know I'm always looking at volume correlation. Changes in volume that are really obvious that correlate with big moves in stock price. So for example, what I'd be looking for here. Did we see substantial volume on this dump off compared to this bounce? Or substantial volume on this bounce compared to this dump off? And by the way, this has to be contextual based on what we would typically expect time of day. Okay, so you see here, I know a lot of people would look at this and say, oh, well, we clearly saw more volume on the dump off than the bounce. But remember, I said we have to be contextual. We expect a fade in volume similar to this into the middle of the day and especially into the early afternoon. For me here, it would be just a force to say that there's anything substantial or definitive to pull out of the 5-minute here. So let's move on here to the 30-minute. This is where things start getting really clear about levels to watch come Monday. The longer time frame you go and the more obvious the indicators that you're actually looking at. You can see here, like the 50 period, that white line was clearly, there were decisions made around that here today. It starts to get more and more relevant. Okay, the 30-minute with the 50 period is relevant. The 50 period on the 4-hour is very relevant. And the 50 period on the daily is extremely relevant. You see where I'm going with this? So I want a well-rounded picture of all the obvious self-fulfilling prophecies, psychological levels that anyone could possibly be making a decision around. So from a bullish perspective, here on the 30-minute chart, really what I would want to see come Monday is a break and hold up above that 50 period, reclaim that as support. We gave that up in after hours. Again, take it with a grain of salt because it was after hours that we saw the fade. But ideally, I just want to see that reclaim come Monday. If you're a bear, you want to see a regular hour test of the 50 and rejection, fade hard down toward that 200 period. If you're a bear, that's what you're going to want to look for here. Okay, now 4-hour chart. Here on the 4-hour, you can see that 50 period's taken its time. We've had quite the move on Nvidia since earnings, right? That's about 6.6%, 6.5% to the downside. Okay, so I wouldn't say it's immediately relevant. However, we've seen crazier things lately out of Nvidia, so I'm just watching that from a bullish perspective. No, I don't really want to see a retest of that because we're looking at nearly 7% away. What I really want to see is just a continuation curl upside. Again, get some feet up underneath the recent move. Get a psychological barrier closer to the stock at these current levels. Bears, really, you'd prefer to see a flattening out of that 50 period on the 4-hour chart here and a continuation downside out of the stock for eventually a test of that 50 period and a break. Okay, now the most important chart of all is going to be the daily. All right, you can see here that we did hit an all-time high here today of 823.94. If we look at the 30-minute, you can see that was off the open there. There it is on the 1-minute. We got that pop and then we faded off the all-time high here. Okay, so if we zoom back in on the daily, what is the most obvious story? Right, you guys, when we get to the daily chart, you hear me say this a lot. When it's obvious, don't overcomplicate it. Okay, you want to look at, I think a lot of people think about TA backwards. A lot of people think that, like, what's the secret? Like, what are the hedge fund managers using? I don't know what it is. What are they using? They're keeping it a secret. And when you think that way, you're going against why TA works to begin with. It works because people believe it works. I mean, right? People make decisions around it, and then it starts to work a little bit, right? All of a sudden, hedge fund managers are like, well, they're making decisions around it, so now I have to. And then it starts to work a lot, and now algorithms get programmed to make decisions around those levels to try to make money off of the people making decisions. It's just a self-fulfilling prophecy, so do not overcomplicate it. What is the story here? It's $800 a share, right? I mean, really, bulls reclaim 8 come Monday. That's really my big goal. Reclaim 8, head up. Ideally, I mean, it would be wonderful to crack 825, move into another all-time high. But goal number 1, if we just reclaim 8, hold it as support, I'll be thrilled. Bears, 800 is your enemy, right? If we test it, fine, but you want to see a fade hard off 800 down towards 750. Now, implied volatility. We have seen implied volatility fade hard off of earnings, as we talked about, not unexpected at all. If you have seen some IV crush in your contracts, this is your culprit right here. We discussed this. I made sure you guys were aware of that. And we have seen that now. That happens more often than not after earnings. So the lower IV goes, the more favorable typically conditions are for options buyers to buy new contracts. Okay. Right now, we currently find ourselves in about the middle of that range compared to the last few months. Now, options bias in the chain today. 3.2 million total contracts traded approximately. This is, of course, just from Friday here. Big sample size. We can get some good, well-rounded data out of that sample size. Calls. 1.97 million calls, 1.22 million puts. We are seeing a call-heavy overall bias, or overall ratio, right? A call bias. Now, the short-term speculators, the 0 to 20 delta range, those are those cheapy, gambly style, short-term bets, the out-of-the-monies, right? Relatively undecided, but a slight call bias. 675,000 calls, 645,000 puts. All right, but look at this. Every single delta range, all of them, leaning call heavy. That's going to be the short term, the mid-term, the long term, right? The out of the money, the at the money, the in the money. All leaning call heavy, leading to a rather substantial overall call bias on the overall call put ratio. As always, make sure your risk is managed. Of course, the options traders, they can be wrong. Appreciate you guys. If you got value out of the video, subscribe to the channel. And again, if you wouldn't mind, before you head out, leave a like on the video. Helps out tremendously. And I'll see you in the next one.